Hey everyone, this is C Crypto Daily Buzz. Today is May 8th, 2026, and I'm here with the most important crypto stories that matter for investors across Southeast Asia. This channel summarizes the key crypto news for traders in the Philippines, Vietnam, Indonesia, Thailand, and Singapore, all in one place. Let's get straight into today's three stories. First up, Bitcoin's battle at the $80,000 mark. Bitcoin is once again sitting around the $80,000 zone, and the picture under the surface is a tug-of-war between strong ETF demand and rising long-side leverage. Spot Bitcoin ETFs in the US have now logged 5 straight days of net inflows, with around $1.1 billion added across just 2 recent sessions. With BlackRock's IBIT leading the pack, JP Morgan even raised its outlook on Strategy, forecasting significant additional Bitcoin buying this year. But on the derivative side, analysts are flagging that this rally was partly fueled by leverage, and a long squeeze near $80,000 is now a real risk. My read for Southeast Asia investors is balanced. The structural ETF flow is genuinely supportive, but a market that needs constant leverage to stay above $80,000 is fragile. So instead of chasing, this is the kind of zone where I'd rather scale exposure carefully and protect against a sharp downside flush. The second story comes from Wall Street directly. At Consensus 2026, Jed Finn, head of Morgan Stanley Wealth Management, made a bold prediction. He predicted that within 5 years traditional finance will fully absorb DeFi, and the term DeFi itself will simply disappear as it becomes standard inside banking. Alongside that, Morgan Stanley introduced a new product that lets clients move external crypto holdings into an account and convert them into an ETF. This allows clients to borrow against that ETF without selling the underlying assets, a structure designed to unlock liquidity without triggering taxable events. For Southeast Asia investors, this is significant. It signals that institutions in our region will likely roll out similar crypto-backed credit products much faster. At the same time, it's a clear reminder that pure on-chain DeFi protocols may face heavier competition from regulated TradFi rails soon. The third story is a serious DeFi risk reminder. The Seoul Southern District Court has issued a major ruling against the operator of Orbit Bridge. The court ruled that Oasis is liable for around 70% of the damage from the early 2024 hack that drained close to $80.5 million. Finding that the company failed its custody duties despite technical efforts, the court ordered compensation for users, setting a massive legal precedent. This ruling matters far beyond Korea. Cross-chain bridges are widely used by Southeast Asia traders for remittance flows and DeFi yield strategies. My personal take is straightforward. Bridges have always been one of the highest risk surfaces in crypto, and now there is clear financial responsibility for operators. For C users, the lesson is to limit exposure time, prefer well-audited options, and treat bridges as temporary infrastructure, never long-term storage. Let's recap today's 3 stories. First, Bitcoin is testing $80,000 amid a battle between ETF inflows and leverage risks. Second, Morgan Stanley predicts TradFi will absorb DeFi within 5 years and launches a new crypto-collateralized loan product. And third, the Orbit Bridge ruling sets a legal precedent for bridge security liability following a major hack. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. Chart analysis and trading insights. Join our free Telegram channel, link in the description. See you in the next one.